Amazon just beat earnings again. Revenue up 13%. Profits smashed expectations by 23%, and the stock spiked to $244. But here's the question. Can it keep going? I mean, everyone's all talking about AI, but I'm watching something deeper. Amazon just hit $33 billion in quarterly revenue. That's 20% growth with a 35% operating margin. And that kind of margin that prints cash while everyone else fights for scraps. But there's a problem. Amazon's running into the same wall that everyone else is chasing in AI. Power, infrastructure, and regulation. They can't expand data centers fast enough, and the FTC just slapped them with a $2.5 billion fine. So yeah, the stock's ripping, but the risks are stacking as well. And what I'm watching isn't just the numbers. It's how Amazon handles what I'm going to call the AI bottleneck. Because if AWS keeps scaling while everyone else slows down, this stock doesn't just grow, it compounds. But if infrastructure or policy hits harder than expected, I think the whole thing could stall faster than anyone would ever imagine. Hey, what's up? My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor. That's a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/ricko to get your 10 stock picks right now. And that's why in this video, I'm going to be covering Amazon's latest earnings release, what Wall Street's betting on today, and the one signal that I'm tracking that could tell us if Amazon's run is just starting or if it's already over. Amazon was founded back in 1994 by Jeff Bezos as an online bookstore. We know this. And over the past 3 decades, the company has completely evolved into the company that it is today. It's hard to believe now, but back then, people thought selling books online was a bit of a harebrained idea. What started as a small way to buy books online has now become one of the most diversified technology companies in the world. So what exactly does Amazon do, right? Well, the company operates several segments. There's, of course, the e-commerce platform. That's the one that we all know and use every single day. It connects millions of consumers globally with products ranging from everyday household items to electronics and even clothing today. And then there's Amazon Web Services, or AWS, and this segment provides cloud computing infrastructure and services to businesses of all sizes. Now, Amazon also owns Prime Video, which is a streaming entertainment service that competes with Netflix and Disney+. And the company also operates their physical retail locations, which includes the Whole Foods grocery stores. Now, Amazon's target customers are basically everyone. Everyday consumers are shopping online, small businesses selling on the marketplace platform, and even enterprise corporations using AWS for their technology infrastructure and entertainment seekers watching Prime Video content. So I think you could say that Amazon is not just, it's obvious, right? They're not just a retailer. They're an entire ecosystem touching almost every part of the modern economy. And that's where things really start to get interesting. Because before the earnings release, Amazon stock was bouncing between $220 and $230. Today, it's around $244. It's quite a spike, especially for a company as big as Amazon. I'm going to cover more about what caused that spike in a little bit. But for now, Let's zoom out and see the stock's recent performance. Year to date, Amazon is trading 11% higher, while it's up 27% over the last 52 weeks. Now, compared with the rest of the Magnificent Seven, Amazon is performing near the bottom of the charts. It used to be dead last, but it has overtaken both Meta and Apple after their earnings release. So, while it's not quite leading the pack yet, it is quietly making up ground, and that's a signal worth paying attention to. So, what was the driver? What drove the stock higher? Well, of course, it was their financial release. And well, there was a lot of buzz around it in my Discord channel, so let's talk about it. Amazon recently released its third quarter financials, and they reported 13% year-over-year increase in revenue to $180.2 billion for the quarter, while overall operating income remained flat. But the star of the show here was the bottom line. Amazon ended Q3 with $1.95 in earnings per share, handily beating analyst expectations by over 23%. So Amazon made a whole lot more money than Wall Street analysts expected, and that kind of beat gets investors excited fast. I would say that arguably the most critical catalyst for Amazon moving forward is their AWS growth and monetizing their AI investments. AWS grew 20% year over year, while operating income from the segment grew 9%, and all of that with a 35% operating margin. Operating margin tells us the amount of money that the company or the segment has after covering all operational costs from total sales. The higher the operating margin, the better. To put that into perspective, that 35% is several magnitudes higher than Amazon's retail business, which clocked in around 5% in North America and 3% in the international markets. So, AWS is where Amazon makes all its real money. Everything else is basically scale and reach. Now, what makes this even more exciting is that management is actively pushing into agentic AI, which are systems that can autonomously perform tasks on behalf of users without constant human supervision. That's the agent part of agentic. And the company is expanding several AI agents, including Transform, which is showing some increased adoption, Connect, which has reached a $1 billion annual run rate, and Kiro, which has been well received by developers so far. Amazon has also launched other products like Bedrock Agent Core and upgraded its Nova AI models to capitalize on this ongoing trend. And on top of that, the company is also winning some major enterprise customers. Some of the most notable ones include Delta Airlines, Volkswagen, Fox Corporation, ServiceNow, Lululemon, BT Group, and the U.S. General Services Administration. And of course, these are some of the world's top technology users, and they're choosing AWS over competitors like Azure and Google Cloud. Now, if AWS can maintain this double-digit growth through AI services that command a premium, well, I think this could be a core upside driver for the entire company. I mean, I see this as Amazon's strongest growth catalysts. As demand for cloud computing and AI infrastructure, it shows no sign of slowing. So you could say that Amazon's future is being built inside AWS, and the race to dominate AI could decide who wins in the next decade. But of course, there's more than one side to every story, just like every pancake has two sides. So let's talk about the risks. The first major risk are the regulatory and legal issues. The Federal Trade Commission just announced a $2.5 billion settlement related to what they call dark patterns in Amazon Prime. And this just refers to user interface designs that allegedly make it difficult for customers to cancel subscriptions. But beyond this specific case, Amazon faces a broader U.S. antitrust lawsuit that's almost sure to drag on for years. Meanwhile, in Europe, the Digital Markets Act is examining potential self-preferencing, where Amazon may favor its own products over third-party sellers on its platform. And of course, the concern is the adverse outcomes in any of these proceedings could result in some significant fines or even force Amazon to change how it operates. And that could constrain its operations. Now, the regulatory risk is real, but I think it's already reflected in the stock price since these issues have been going on for years. Now, the real question I have is whether any eventual penalties will hurt Amazon's business model or any tweaks are going to be required to their practices. And there has been some looming AI and data center bottlenecks as well. There's been reports from the Department of Energy that has identified constraints in electrical grid capacity, as well as limitations on the construction of new data centers. If AWS expansion is slowed by infrastructure issues or cost increases before new revenue comes online, margin expansion could stall. So the issue here is execution risk, not demand risk. And specifically, Amazon needs to build capacity quickly enough to meet customer demand while managing costs effectively. Meanwhile, the company is also spending aggressively to build the infrastructure that's needed to capture all this AI workload growth. And there's the problem. There's a risk that these investments may not generate the expected returns in time if these operational bottlenecks aren't addressed quickly. And we saw the results of run rate expenditure hitting this bottleneck with Meta recently, and you can watch this video about it right up here. But I say this is more of a timing risk than a fundamental threat, but it is a threat at the same time. So Amazon's biggest challenge isn't growth, it's timing that growth perfectly before the bottlenecks catch up. And that's what I'm watching most closely. And of course, I will be covering Amazon in future videos, so definitely be sure to watch out for them. Now, with all that out of the way, is Amazon a buy right now? Well, it looks like Amazon still has Wall Street's full support. A consensus among 58 analysts rate the stock a strong buy with an average score of 4.9 out of 5. It's almost a perfect score. And a high target price of $305. Outlook has even improved over the last 3 months. As of right now, the stock has no hold rating whatsoever. So I think it's fair to say that even the market experts are banking on Amazon to perform very well in the next 12 months, maybe even a boom in the stock price. But the question is, do you believe it can catch up with the rest of the Magnificent Seven? Or is this where everything stalls? But if Amazon keeps compounding its AI edge, well, I think this could be the start of its next major leg up. But if not, we may be looking at a plateau in disguise. But what about you? Let me know what you think in the comments below. And while you're there, do hit those like and subscribe buttons because it'll help others find the video, it'll support the channel, and make sure you won't miss out on any of my future deep dives. Well, folks, that's it for me today. Thank you so much for watching. I'll see you next time.